Hey everyone, it's 2 Minute Tuesday where I break down real estate topics in plain English fast. Now, if you've ever heard the term mortgage rate lock and wondered what exactly does this mean, or better yet, when you should use one, you're in the right place. Now, this can be a little confusing, so I'll give you the lowdown here momentarily. Now, before we dive in though, go ahead and tap that like button and subscribe to the channel. That way you don't miss any helpful tips coming around the corner. And as always, hey, thanks for watching. So let's fire up the old timer and jump into what exactly is a mortgage rate lock. Well, in simple terms, locking your rate means you're telling the lender, let's freeze this interest rate right here, right now. And once it's locked, it won't go up, even if the rates rise before you close on your home. Now, this can save you thousands over the life of your loan. Now, let me give you an example of this. Let's say today's rate is 6.5% and you're about 45 days away from closing. If you lock it in right now, that's the rate that you're going to get no matter what the market does tomorrow. Now, if the rate jumps up to 7%, you're safe. Good move. But here's the flip side. If the rate drops to 6.2%, well, you're still locked in at that 6.5%. So the big question is, when should you lock? This is a really great question. You typically want to lock your rate once you have signed a purchase agreement, especially if the rates have been climbing. Now, the idea here, no surprise, is to protect yourself from rising costs. Now, if you're happy with the monthly payment at the current rate, locking in this gives you peace of mind. But here's when you might not want to lock. Now, if you're early in the home shopping process, or if rates have been trending downward and you're willing to take a little risk. Now, some lenders, they do offer what's called a float down option, which gives you a lower rate if the market improves, but not all lenders do this, so be sure to ask. And before we part ways here, something also to keep in mind as well and not to forget, rate locks typically last 30 to 60 days depending upon what lender that you're using. If your closing does get delayed, you might need to pay for an extension, so timing really does matter here. So to sum it up, a mortgage rate lock is a smart move when you're under contract and ready to protect your plan against market surprises. Just don't lock in too early or too late, because as you've just learned here, timing is really everything. Well, friends, hey, that's going to be it for this 2 Minute Tuesday. If you found this helpful, check out my other 2 Minute Tuesday videos for more real estate tips in small, bite-sized, easy-to-digest videos. And that is officially all I have here for you today. I've got you covered whether you're buying, selling, or just curious. Send me a message. And as always, thanks for watching, and I will see you in the next video.